Welcome to the Zenergy Podcast. I'm your host, Karan Takhar. On today's episode, I sit down with Lara Pierpoint, Managing Director of Trellis Climate, a program within Prime Coalition. Lara first gives us a brief overview of how Trellis Climate came to be, shares how she and Prime Coalition Executive Director Sarah Kearney merged their two nonprofits to become Trellis Climate, and touches on the mission of the program. We also talk about what types of projects Trellis focuses on and where they see that they fit in the capital stack. We discuss the gap they are aiming to fill in the market, how they are supporting entrepreneurs as they navigate the current political climate, and how philanthropy is stepping up and providing capital in new ways. Lara shares what criteria Trellis look for when determining who and what to invest in, and gives details about her day-to-day responsibilities. I'm so glad I was able to speak with Lara. This interview was extremely insightful. I personally learned a lot and really hope that you also like it. If you'd like to learn more about Prime Coalition, you can check out their website at www.primecoalition.org. And now, please enjoy my conversation with Lara Pierpoint. Hello, Lara. Welcome to the Zenergy Podcast. It is a true honor to have you on, and I've been super excited for this interview ever since we last spoke several weeks ago, and really appreciate you taking the time here. So to kick us off, could you introduce Prime Coalition and Trellis Climate for our listeners? What are the core missions of each, and how do they work together to accelerate innovation, especially in areas where traditional capital might hesitate?
Oh my goodness. Well, first and foremost, thank you, Karan, for having me today. I'm really excited to be speaking with you. You just asked a huge question, so I'll go ahead and give you the briefest of responses, but I'm
happy to go big or go home.
Exactly. Just cover it all in one big one. So great question. So first and foremost, Prime Coalition and Trellis Climate are actually all one organization. The way we describe it is that Trellis Climate is actually a program of the Prime Coalition. And how we came together is a bit of a fun story. Sarah Kearney, as many folks may know, is the founder of the Prime Coalition. She founded Prime in the mid-2010s to really solve a pretty major problem that existed in the world, and that is that philanthropists can put their money toward for-profit entities and companies where there is an impact in sort of mission associated with what they're doing. But really, when Sarah was looking at this mechanism, it had effectively not been used in climate to support climate companies and climate technologies. And so she founded Prime to be that 501c3 to really enable these transactions to occur and to open the floodgates to catalytic capital, specifically within climate. So as folks may know, in Prime's early years, particularly again in that sort of mid-2010s timeframe, this was the moment when the first wave of climate venture capital was crashing against the shore in a very dramatic way. And so there was not a lot of early stage venture funding to really go around at that moment, particularly for climate companies. And so Prime stepped in to help solve this problem. And by bringing catalytic capital to the table, they were able to invest in some specific companies and then eventually to generate funds all the way up through what is now a ZOLA, which is a blended finance fund, in order to support some of the most promising, most impactful climate companies that are out there, but that might have a risk profile, that do have a risk profile that makes them challenging for venture capital to do on its own. And so Azola is very happily spinning out of the Prime Coalition fully right now. But of course, as all of us have known, looking at the pipeline and what it takes for a climate idea, a climate mitigation idea to become reality, it's a lot. And an early stage venture is not the only challenge. So right about a couple of years ago in 2022, I was thinking about this problem and specifically around commercialization and scaling for climate technologies and how can we do more to really help at some of the later stages of the innovation cycles to get companies where they need to go and to make sure that they're getting points on the board for climate change. And so I had founded a nonprofit called Actuate Climate to focus on those challenges. And as Sarah and I started talking, we realized how unbelievably aligned our visions were around how philanthropy needed to support and do more to get this commercialization working. And so we did something kind of crazy and we actually merged our nonprofits. And so that was the genesis of Trellis Climate and the Trellis team. So Trellis now exists as a program within Prime to really focus on commercialization and scaling of climate technologies and figure out what it's going to take to close that gap.
Super interesting, especially the fact that you and Sarah just started talking what seems like organically and then ultimately led to collaboration. How exactly did that introduction between you and Sarah occur? And could you just provide a little more background insight into what those conversations look like?
Sure. Well, this is a bit of an interesting situation because the first introduction between me and Sarah, I think probably happened in 2006. So we've known each other for an absurdly long time. And effectively, we were both part of the MIT ecosystem, both wildly passionate about impact and climate. And we have stayed friends for that entire time and have kind of, checked in with each other over the course of our careers. So that was part of what actually made this possible. It was the fact that we started from a place of friendship and really deep mutual respect and trust as we started realizing that what we wanted to do with our sort of career moments were so highly aligned.
Such an incredible example of how a network could actually lead to some tangible outcomes down the line. And speaking of big topics, we have a few more big topics to discuss. As you're probably aware, there's so much happening right now, from tax credit uncertainty to budget tightening, tariff discussions, grant delays, and shifting DOE priorities. Would love to get a sense of how you're making sense of this moment, just to get some perspective into how you're looking at the overall market.
Oh my goodness. Well, to your question around how am I making sense of this, I think my response to that is I'm not sure if anyone's fully making sense of what's happening right now, regardless of where you stand in the political spectrum. It's an incredibly wild and I think volatile moment, I think across the board economically and obviously especially in the realm of climate technologies. In terms of the sorts of things that we're thinking about and how this is impacting our portfolio, I think the short answer is that there's still more unknowns than knowns about exactly how things are going to shake out. I think it won't be a surprise to hear that there are concerns about grant funding and whether sort of existing grant funding will come through, even if it's contracted. There are concerns about whether new grants will ever get issued. There are concerns about whether the Loan Programs Office will continue to operate and be a major player, particularly in this moment of scaling and commercialization. And then there are all sorts of questions around tax credits and other government-funded programs, where all these things are going to go. I think one thing, though, that gives me some hope around all of this, if I can actually jump immediately to that, is that climate companies have had to be scrappy. And I think particularly in this climate 2.0 wave, it's been clear that putting all of your eggs in a single financial basket is not a strategy that works for any climate company, and particularly for the hard tech companies. So the founders that have been successful, particularly to date, are the ones who have been able to really look out there and understand what are different opportunities for sources of funding and support. How do you manage a basket of things? How do you make sure that you're not singly reliant on any one financial mechanism? And so many of them have grant funding, they have venture funding, they've looked at venture debt. In some cases, they're leveraging equipment debt already, certainly looking at where there are tax credits and sort of other government funding programs, and not just federal government funding programs, but also state funded programs. And so I think that's one thing that gives me some comfort, is that as we look across our portfolio and at the companies that are at this moment of commercialization, we really are seeing that there is a lot of drive, there's a lot of willingness, there's not a lot of stepping back and hand wringing. It's really about how do you meet the moment and do what you can with the resources that you're going to be able to marshal.
Can you talk a little bit about where you fit into the capital stack? Because I think it would help provide important context for some of the following questions.
Yeah, that's a great question. So we can fit in a lot of different ways into a capital stack. And I think the way that really the way that we think about it is with companies and sort of where they are and what they need in any given moment. So where we tend to focus are companies where they've really kind of gotten their technology proof points on some level. And so that means at a minimum at some sort of like laboratory or bench scale, but really probably more than that. They've built some kind of demonstration. They're pretty clear that they've gotten an idea that has legs. And they're really ready then to take that next step into not just developing the technology, but selling the technology, having a customer, integrating with that customer, ideally starting to become revenue positive, those sorts of things. So at that moment, that's kind of where we tend to engage with these companies. And then I would say the next question for us and for them is what do they need? So obviously the first piece of that is what do they need to build? Is it that you need to build your first of a kind commercial plant? Do you actually need to do a demonstration at some subscale before you do that commercial demonstration or that commercial plant? What are the other things that you need to bring to bear in order to kind of get through the next steps of commercialization? And the particular sort of structure for what each company should do depends pretty heavily on their technology and their business model. So obviously, the way that you're approaching that commercialization and scaling moment would look very different if, say, you're the kind of company that's building a small product that gets sold directly to lots of consumers versus you're building a gigantic power plant or something that looks a little bit more like that. And so we can come in and say, okay, what's going on? And the first question that we tend to ask is there a capital gap present? Is the next step in your scaling journey something that you, as really effectively a startup, is it something that you can fund through venture capital, through grants, through sort of the traditional mechanisms that exist out there? Or is there some piece of the puzzle that's missing for you? And then part of what we've really been doing to date is saying, okay, what is the best mechanism if there is a gap for us to come in and fill that? And so one of the things that we've done at Trellis Climate quite recently is we've actually syndicated. We're actually in the process of finalizing our, I would say, fourth and fifth deals. And with each of these, we're using slightly different mechanisms and really testing this question around what is the best way to apply catalytic capital, which of these mechanisms is the most effective, and which is the most repeatable across different kinds of technologies. And so in general, where we find is that we're coming in as some slug of equity that comes into the company, but we're increasingly looking at opportunities that are non-dilutive. So that is to say where we fund some piece of a project or an insurance policy or something along those lines to move a project forward. And so I think the short answer is that catalytic capital can apply in a number of different ways across sort of a project or a needed scaling step. And this is exactly the work of Trellis right now, is to really test by doing around what are the appropriate ways to do this kind of consistently going forward.
And it seems like an area that LPO stepped in a pretty big way over the past 4 years in terms of being able to help provide that early low interest loan credit for some of these newer projects that haven't really established a high level of commercialization to get started. And as a result, makes sense why initially you're mentioning how LPO, waiting on LPO, like what exactly is going to happen there on the grant side of things. So just curious to hear your thoughts on what your messaging is for your entrepreneurs right now.
Yeah, that's a really good question. I was just recently at the ARPA-E conference, and to be honest, I was almost surprised that the energy level has not dropped. These entrepreneurs and these folks working for these companies are on a mission. They're undeterred, they're focused, they're working hard. Obviously, everyone is getting frustrated in various moments, particularly given that these mechanisms that we sort of assumed were there may not be. But again, I think the point is that we're all out here to do something that we think is really important, and therefore we're going to do what we can with the resources that we have and move this forward, really come hell or high water, which I think is so encouraging. And we're really here, I would say for us in particular, we are really empirically looking at what does the ecosystem need. So one of the things that we've done within my program is we've curated a list of about 150 companies within the climate space that are at this moment of commercialization and scaling and have various sorts of projects. They have, they're in sort of a number of different stages, and some of them will build big projects in the near future. Some of them, they're still a couple of years away from that. But again, one of the things that we're very relentless about within my team is constantly asking ourselves, where are these companies? What is it that they need? What are they able to get from what the ecosystem is currently offering, especially around market rate capital? And then what does that mean about the gaps that need to be filled by the folks who have catalytic capital and sort of philanthropic approaches to this space?
That makes a lot of sense. And I assume you're probably still figuring out some of the answers to those questions because a lot of this is all very new. But have there been any initial insights into what you're seeing that these folks need in the current moment?
Oh my gosh. Okay. Well, if we have like an hour, we can talk about all of those different things. There are a lot of things I think that we're seeing that are some needs out there and some that are getting met in some really robust ways and others that I think we have a lot more work to do as an ecosystem. I'll start with one of the most common ones that everyone discusses, and that is sort of the team expertise question. And really, I want to broaden that and make clear that there's like a team culture question around this too. Many folks have grown up in the sort of Silicon Valley mode of venture capital and sort of startup world. And there's an ethos associated with that, which is, you fail fast, you break things, you move as quickly as you possibly can. And a lot of this has to get turned on its head when you come to the moment of really commercializing and building projects, and particularly if and when you start getting to the point that you're ready to engage with infrastructure investors. So making sure that teams have the right people in place to understand how to make that transition, to build a project, to sort of redefine the team culture in a way that makes sense in the context of building real things and putting steel in the ground and not just doing technology development. That's one thing that a lot of folks in the ecosystem are focused on right now. And there's some really cool programs out there aiming to do that. And it's something that we assist with as well, with some of the things that we provide around like technical assistance and support for the folks that we ultimately invest in. So that's one thing. I think, and another thing that we're seeing is just a need for more capital, period. I think many of the projects that we're seeing that go forward are going forward because they're raising fairly large venture rounds and then financing the majority or all of the project essentially on your startup's balance sheet. So that's workable. It's just a really challenging approach, and we're starting to see evidence that it's not going to work for the entire ecosystem for a couple of reasons. One is that there isn't a ton of venture funding, particularly at Series B and later funds to go around. And S2G did a great report on all of this, talking about the missing middle of that kind of capital. And another reason is that it's just a really expensive way to fund a project that isn't itself going to generate revenues that are really consistent with what venture capitalists are expecting to make on their investments. And so when we think about that as kind of a challenge, what we see is that there are a number of different needs. These companies need a little bit more development capital. It would probably be ideal in many situations if they could bring more non-dilutive capital into actually doing these projects. The challenge, of course, is the risk side of the equation, because non-dilutive capital only wants to be there when there's really low risk, which is not the case for these projects that are super early. And so this is one of the main reasons that we see a need for philanthropic catalytic capital in this space. And then again, there are a number of mechanisms by which we can support bringing together the pieces of the puzzle in that ecosystem. I think another thing that we're seeing is that in some cases, people need some really basic things like insurance policies. In some cases, they need, some support from the regulatory perspective to really understand and be able to engage productively with a number of different regulatory regimes at the state and federal level. So yeah, those are some of the pieces of the puzzle. But I think, but again, a lot of really interesting approaches to help startups navigate those.
Thank you so much for expanding on that. And to just stick on this thread a little bit, because I think there are a lot of people out there who will be listening who are navigating a really uncertain climate. Since you're someone who gets to work with entrepreneurs on the ground, would love to just dig a little more into what other avenues that entrepreneurs who are working on some of these projects could tap into. Are you seeing more philanthropies start to step in some ways similar to what they did back in 2016, 2017? And what other creative steps have you seen or are entrepreneurs currently discussing to be able to navigate the current climate?
Yeah, I think, well, a number of things. One, on your question around philanthropy, I do think philanthropy is stepping up, and that's been really exciting to see. And one of the archetypes that we're seeing actually are folks who have made a lot of money, particularly in the tech industry over the last couple of years, and then are getting to a point now where they're saying, gosh, I need to do something really meaningful, or they're looking at their kids and saying, I would like them to have a planet that is livable. And so the number of new entrants to the climate space, particularly on the philanthropy side, is high. And it's really invigorating to see that, to see how much people care. That said, I think this is also a really difficult moment for philanthropy. I think the reality is that, there is a lot of economic uncertainty out there. And that means that times are challenging for philanthropists. And also, because of some of the things that are happening at the federal government level, there are a lot of nonprofits that are struggling in ways that they weren't expecting to in this particular moment. So the asks of philanthropists are really dramatically increasing too. So this is a moment where the asks are going up, in some sense, the level of concern on philanthropists' part around economic stability is also going up. It's a really tough moment, I think, for everyone. And I don't want to understate that. That said, I think, as I said, there is some more excitement. And then I would say with respect to startups, again, the scrappiness levels that we're seeing are really quite high, particularly with the folks who have been successful up to this point. And so, for example, one of the things that I think is sort of newer is I don't remember a lot of discussion around equipment financing in the context of Climate Tech 1.0, but this is something that folks are realizing can be part of their journey now. And similarly, I think venture debt in the context of companies is starting to be much more common as a way to kind of expand your sources of funding. So a lot of things that folks are looking at and definitely getting more creative around.
Amazing. Shifting to like the personal side where you're engaging with an entrepreneur. I think there are a lot of misconceptions. I recently saw a video from someone, Andreessen Horowitz, where they're talking about some slight misconceptions that entrepreneurs often have when they come in to pitch. And I thought it was a really interesting video. Are there any things that come to mind that you think entrepreneurs should be aware of before they come and meet with you and the team?
Yeah, by far the biggest one is when folks hear about us and they come to talk to us, there's a tendency sometimes to say, oh, you're philanthropy. That means I can expect a grant. And so folks see the philanthropic community as being the answer to, oh, money just comes to me and I don't have to pay anything back and I'm good to go. And the reality is that philanthropic granting to for-profit startups is possible, but it's extraordinarily rare. And again, that's some of the reason that Prime exists is that philanthropists have other options. There are ways in which they can actually use their philanthropic dollars effectively to put into these climate opportunities. And then if those generate a return, this is what Prime does, is they facilitate that money then going back to the original donors, and that funding can get recycled for philanthropic activities, which is a really attractive thing for philanthropists to do, especially if they want to keep giving. And so I think that's one thing that I would love for the ecosystem to learn is that philanthropy is much more varied than just granting. And if you come into a conversation with us or anyone in the philanthropic world, understanding that and having some sort of space for there to be a lot of different ways that you could interact with philanthropy, you're likely to be a lot more successful. And there's one other key element to this, which is that I think another kind of misconception is that companies may come in and they say a grant is going to be everything and this is exactly what I need. If I can just get this money for free effectively and move forward, that's going to be awesome. And yes, there are some advantages to working that way. But you also want to think carefully about the kind of money that you're bringing in at any given point, because the more something looks concessionary or grant-like, the more questions there will be by future investors around why was that in your table? Is that something that you really needed? If you couldn't move forward without that, they look at sort of traditional venture investing or market rate investing as being kind of a seal of approval. That's something that can be really helpful down the road. So that's one of the reasons that we at Trellis have a really key philosophy, which is that we aren't going to be concessionary unless we absolutely have to move an incredibly high impact project forward. And then if we are going to take as few concessions as absolutely possible. And it's not because we're sharky investors. It's because this is actually what's best for the company and what sets them up for success. And the less that we're sort of distorting some of these traditional financial instruments, the better off everyone is, particularly when it comes to those projects down the road.
What are some other things that takes place in these meetings that you have with entrepreneurs that you've noticed separate those who ultimately do receive investment from those who maybe unfortunately in that moment get the no?
I mean, I would say that honestly, it very rarely does it come down to like, oh, this particular founding team has made a misstep with us and therefore we're going to say no. I will say a couple of things. We invest exclusively in companies and opportunities for which the leadership is unabashedly mission aligned, because that's one thing that we can't control or change about them, but if and when we know that the founders are in it for the climate and that they're going to make decisions consistent with impact, that gives us a huge amount of comfort. It gives our philanthropists a huge amount of comfort. It's really sort of something that's essential for us. So we're always looking for that. And then, I would say beyond that, the things that sort of make the difference in the opportunities that we focus on and the ones we don't, really, it just comes down to what meets our underwriting criteria. And for us, we have three underwriting criteria. They're the same that Prime has used since its inception. These are like really sort of evergreen and really key things, and it's what Azula uses as well. The first is impact. So obviously you have to, in our case, have a meaningful impact on greenhouse gas reduction or removal. We also have secondary criteria around equity and community impacts in addition to direct environmental impacts. Our second criterion is additionality. And this is where we say our philanthropic catalytic capital is moving in and supporting this because it's needed, not just because it's wanted or desired by the folks who are in the project. It's something that really is going to make a difference in something moving forward. And that, by the way, is a criterion where a lot of things actually fall out. If you're ultimately going to raise funding from traditional financial markets to move your project forward and you don't need catalytic capital, that's great. We actually look at that as sort of an awesome scenario where then that project, that technology can move forward and we'll move to the next one that does need us. And then the third piece is what we call bridge to somewhere. And for us in the kind of project and commercialization space, there are two pieces to this. One is the specific opportunity. And in our case, it's almost always a project. Is this project going to get built? Does it make sense from a financial perspective? It's really the traditional financial diligence around investing in a project. And then the second piece is what we call systems bridge. And this is where we're ensuring that if we build this project, if we help support this particular technology in this instance, will that lead to a second project and a third, and ultimately to a technology that really has growth potential? And obviously that ties then back in with our impact metric.
How do you all source or identify first of a kind infrastructure opportunities?
It's amazing how much they come to us. So we run generally, through word of mouth and by being really robust participants in the ecosystem. We hear about a lot of the projects that are out there. One exciting thing is, I would say, over the last year, there's really an incredibly strong ecosystem just of folks that talk about folk, right? Like, so this is the first of a kind people. And, we went from there being one or two events, I would say, at New York Climate Week in 2023 to probably, more events than my team could even attend, dividing a conference
I
last
feel like
year,
that was
right?
the theme of this year's or last year's conference, Climate Week.
Yeah, there was a lot going on there. So the pluses and minuses to all of this, but I think the big plus is that, that there's a big group of people who are really heavily focused on this. So these things tend to bubble up, and these pitch nights, in conversations with folks within the ecosystem, there are a lot of these. We also actually do some proactive outreach on our team. So we've identified some areas of high impact potential, and in some cases have sought out some projects and companies within those categories.
So are you adjusting any of those investment criteria that you previously mentioned to adapt to the current times? It seems like those criteria are pretty, since they've been there from the origin days of Prime. So it seems like you might be keeping them. Are there any adjustments that you and the team are making to adapt to the current climate?
Yeah, what I would say is that we aren't adjusting the metrics and we aren't adjusting our process for evaluating them. The results that we get tend to look different. And so one of the things that we often say, for example, is that an additionality assessment is a point in time assessment. So if we're looking at a company or an opportunity, let's say a project that needs to get built, and we determine that there are some structural reasons or other reasons that traditional financing is not likely to come to the table and philanthropic catalytic capital is needed, that is true at the moment that we make that assessment. And that can change, right? And so in many ways, I would say particularly some of the things that are happening at the federal government level mean that we are coming to different conclusions around particularly things like additionality in cases where it's less likely that someone can get a government grant to support some aspect of what they're building, for example. So I would say that the results change, but the methodology doesn't.
What are some of the technologies that you're seeing come across your desk in the current environment, which you might not have seen otherwise?
That's an interesting question. I think, for us, it's not necessarily that new technologies are suddenly bubbling up. I would say that everything across the whole spectrum of the climate technologies has been on our radar screen. And I think that the trends that we're seeing around what's needed and where we're needed and where things are less needed are less affected directly by what's happening with the federal government. And so to make that a little bit more specific, in the carbon dioxide removal world, this is a place where everything is especially challenging. And the fact that like the market for carbon dioxide removal credits is something that is, I'll just say it's still in formation in many ways. That's something that makes these projects are a little bit more challenging to invest in. And there's some great questions, by the way, around like, does that mean they should be invested in, et cetera? But that's one sort of set of issues that I think we see pretty commonly that creates a need. Similarly, or I would say maybe differently on the side of, projects that produce electricity. This is a world where we have power purchase agreements that are pretty ironclad agreements for offtake. And that looks really different from what you might see, for example, in the cement industry, where there tends to be, memorandums of understanding, that sort of stuff that indicate that people will choose to buy your cement, but it's not necessarily the same thing as a power purchase agreement in terms of the strength of the contract. So those are some of the things that I think create some differences among technologies. And then I would say that, again, across the board, what we're seeing is some concern around federal government support, particularly from the grant side. Certain technologies are sort of more potentially reliant on tax credits than others at this particular time. So that makes some differences as well. And then particularly with the Loan Programs Office and the questions around what is it going to look like for LPO to participate or not in the coming future here. I think that really tends to affect some of the biggest projects because that's where LPO tends to focus is in the $100 million or greater in total CapEx required. So those are some of the trends. But interestingly, I think the technologies that we're seeing and the needs are not necessarily shifting dramatically. It's just a question around like, are federal government supports part of the answer or not?
That makes a lot of sense. And I just looked at the time. It's crazy how quickly this conversation flew by. They tend to fly by, but I feel like this one has especially flown by. So I have two final subsets of questions. Can you provide some insight into how you split your time, maybe across sourcing, diligence, founder support, and strategy? And like how many projects do you typically evaluate in a given month? Tack that how you feel fit. Just think it'd be interesting to hear about what your day-to-day in such a seemingly exciting role looks like.
Yeah, it's a great question. One of the things that I love by far the most about my current job is that my day-to-day never stays static for very long. And the way that I really think about it is we have kind of seasons, right? Like seasons where we get to think and kind of spend a little bit more of our time on the questions of overall strategy and what is it that we're going to do for the ecosystem. We have seasons where we are heads down in diligence. We have seasons where we're talking to every company we can possibly talk to and get information about what sort of projects they have online. Seasons where we're spending a lot of time fundraising and engaging directly with philanthropists. And so I would say I've had multiple of all of those seasons already in the context of the sort of lifetime of the Trellis Climate program. And very happily, we're in one right now where, again, we're thinking really deeply strategically and at the same time testing some hypotheses that we have around some of the most catalytic interventions we can make.
And final question, any closing thoughts / piece of advice that you would give to an individual who'd like to break in to the investments field in climates?
Man, that's a great question. I think my biggest piece of advice is get excited. I think there are some reasons to be very daunted by the current world, but this community, this climate ecosystem that I have lived in for my entire career, I would not change it for the world because the people that I get to surround myself with every day are passionate as hell about this. And that is such a cool place to be. And that is not changing just because things get hard. And so my biggest advice, particularly to folks who are thinking about kind of, making a move coming onto the climate side is don't hesitate, jump in feet first, figure out where you can be valuable. There is so much more to what's needed than just technology development. I think in many ways, the climate space has been dominated by the technology people for a long time, and I count myself among those. And I think we've done some very cool things. And I also think we need the financiers, we need the storytellers, we need the communicators, we need all sorts of different people to make this work and to make this transition happen. And we can't stop just because there are headwinds.
Amazing. Thank you so much for
You're
your
welcome.
time today and for sharing all these insights. Really, really learned a lot and appreciate you taking the time. Thank you. Thanks so much for checking out the Zenergy Podcast. If you enjoyed today's episode, please take a moment to rate and subscribe to the podcast. It would mean so much to me and the rest of the team. We release episodes every Thursday, so stay tuned for all new episodes featuring industry leaders building a cleaner, greener future for us all. See you next time.